Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the numbers behind the headlines, and today we've got a deep dive into Enova International's latest quarterly report. Get ready because this one's packed with more numbers than a pocket protector convention. Make sure you are subscribed and join our Discord community, linked in the description for even more exclusive insights. Let's jump straight into the financial heart of the matter, their balance sheet as of the 30th of September 2025. Enova is showing total assets of nearly $6 billion. That is a lot of capital deployed, and a big chunk of that, over $5 billion, is tied up in loans and finance receivables. This tells us their core business is lending money and they are doing a lot of it. What is interesting is how much of their cash is restricted, over $300 million at the end of September 2025, which means that money isn't readily available for them to use however they want. On the flip side, their total liabilities are also substantial, sitting at over $4.6 billion. With a large portion of that being long-term debt to the tune of over $4.1 billion. This is a company that uses a significant amount of borrowed money to fuel its operations. Now, they break down the assets and liabilities of something called consolidated VIs, which basically are special purpose companies they use for their funding. The assets in these VIs are nearly $4 billion. Importantly, the assets held in these VIs can only be used to pay off the debts of those specific VIs. So while it is part of their total assets, it is not cash they can use freely for other business needs. Looking at their income statement for the third quarter of 2025, Enova brought in over $800 million in revenue, but here is where it gets a little complex, the change in fair value of their loans and finance receivables, which is a big accounting swing, wiped out a significant portion of that, resulting in net revenue of about $460 million. Their operating expenses, including marketing, operations, technology, and general admin, were around $264 million, leading to a healthy income from operations of almost $197 million. And importantly, their net income for the quarter was over $80 million, a really strong performance compared to the previous year. You can see that their revenue stream is heavily dominated by loans and finance receivables, which made up almost 99% of their total revenue. This reinforces the idea that lending is their bread and butter. For the 9-month period ending the 30th of September 2025, their net revenue was over $1.3 billion, showing consistent growth from the prior year. Their net revenue margin, that is the percentage of revenue that is left after accounting for the change in fair value of their assets, was solid at over 57%. This chart shows us something really interesting. The revenue from small business loans and finance receivables grew by almost 30% year-over-year for the 9-month period. That is a massive jump, indicating a strong focus and success in that market. Meanwhile, consumer loan revenue also grew, though at a more modest pace of about 14%. Scroll average loan and finance receivable origination amount TAVG. Let's talk about the size of the loans. The average loan origination amount for small businesses is well over $16,000, while for consumers it is just a few $100s. This explains why the small business portfolio is so dominant in revenue generation. It is also showing a slight increase in the average origination size for small businesses, which is a good sign for them. Now, diving deeper into the consumer side, their loan balance is growing, but the net revenue margin here has dipped a bit, likely due to slightly higher charge-offs and delinquencies. This is something investors will want to watch. The ratio of fair value to principal on these loans remains strong, though, indicating their valuation models are holding up. Scroll small business loans and finance receivables. SysMall, in contrast, the small business portfolio is booming. The balance is growing rapidly, and interestingly, the net revenue margin here has improved significantly. This suggests they're managing credit well in this segment while also growing it aggressively. The fair value to principal ratio here is also very healthy. Scroll total operating expenses, total looking at their expenses, total operating expenses are up about 7% for the quarter compared to last year. Marketing is up slightly. And operations and technology also saw an increase, which is expected with growing loan volumes. But what is great here is that these expenses as a percentage of revenue have actually decreased. This means they are becoming more efficient as they grow. Scroll interest expense, net interest, their interest expense has gone up, which makes sense because they have more debt. However, the weighted average interest rate on that debt has actually gone down. This is a smart move. They are borrowing more, but at better rates, which is saving them money overall. Scroll provision for income taxes provision, the tax rate has bumped up a bit this quarter, but it is still within a reasonable range. Scroll net income net and the bottom line. Net income. It is up a huge 85% for the quarter compared to last year. That is a massive jump, and it is driven by strong revenue growth and what looks like good cost control. For the 9 months, net income is up over 57%, which is also fantastic. Scroll total cash flows provided by operating activities had total when we look at cash flow from operations, it is impressive. For the 9 months ending the 30th of September 2025, they've generated over $1.3 billion of cash. This is the lifeblood of the company and shows they are generating plenty of cash from their core business. Scroll cash flows from investing in investing activities. They've used over $1.6 billion. This is largely due to the sheer volume of loans they are originating and acquiring, which as we've seen is a massive number. Scroll cash flows from financing activities sees financing and finally financing activities where they've brought in over $350 million in the 9-month period. This is a mix of borrowings from their securitization facilities and their revolving credit line, along with share repurchases. Scroll current debt facilities current. Now let's talk about their debt situation. As of the 30th of September 2025, they have quite a bit of debt. The total funding debt is over $3.2 billion. On top of that, their corporate debt, which includes a large revolving line of credit and senior notes, adds another $1.7 billion. So they have a substantial debt load, but it is important to note that much of this debt is secured by the loans they originate, which makes it less risky for the company as a whole. They have also recently extended the maturity of their revolving line of credit and increased its borrowing capacity significantly. This filing is for the third quarter of 2025, and it represents a company that is growing aggressively, particularly in its small business lending segment. Their financials show strong revenue growth and a significant increase in net income. The fact that they are managing their expenses as a percentage of revenue so well while expanding is a really positive sign. However, their heavy reliance on debt is something to keep an eye on. While it is secured by assets, high debt levels always introduce a degree of risk. The large and growing small business portfolio seems to be a key driver of their success right now, and it looks like they are managing the credit quality in that segment very effectively. Overall, Enova International appears to be in a strong financial position, demonstrating robust growth and efficient operations. The key will be their continued ability to manage credit risk as they expand, especially in their burgeoning small business segment. Alright, that is our breakdown of Enova International's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.